Today is Friday, May 6, 2016, and this is the ADM Investor Services Weekly Market Wrap-Up. Today's guests are Alan Bush, Senior Financial Economist here at ADMIS, and Mike Niemiec, ADMIS Grain and Oilseeds Analyst. Alan, we'll start with you. Earlier this week, Atlanta Federal Reserve Bank President Dennis Lockhart said a June Fed funds rate increase is a real option, and San Francisco Federal Reserve Bank President John Williams said he would support a tightening move at the next meeting if the economy remained on track. What is the probability that the Fed will increase its Fed funds rate at the June 15th meeting?
Well, actually, the Fed may not be quite on track in light of the two most recent reports. The non-farm payroll report came in a bit weaker than expected, and last week GDP was also a little weaker than anticipated. So it does look now like the Fed may be very slow to raise rates. In fact, prior to the employment report today, the probability of a June increase in the Fed funds rate was 13%, and now it has dropped down to 6% after the non-farm payrolls coming in actually quite a bit weaker than expected, and some of the other numbers also weaker than expected. So we're looking for no rate increase possibly this year. Potentially there could be one in December.
Gold and silver futures recently advanced to 16-month highs. Is there further upside potential?
Absolutely. Production for both gold and silver peaked last year, and it is likely to decline over the next 4 or 5 years. So this is just the beginning of a bull market that we are going to see in both gold and silver. So look for much more to the upside. I think the rallies in both gold and silver should continue well into this year, probably into next year as well.
Earlier this week, stock index futures came under pressure due to hawkish interest rate comments from Fed officials. What is the outlook for stock index futures now?
Okay, there was a bit of a setback in the indices with Fed officials talking about a rate increase in June. And this, I believe, was primarily done to support the dollar. I really don't think Fed officials believe that they can raise rates in June, especially in light of the employment numbers that we saw today. So this was mainly a dollar support initiative. I believe that stock indices will continue to advance, and one of the main reasons is that the Fed will be very slow to raise rates this year, maybe not at all. In fact, it may be next year that the Fed can raise rates. So look for higher in all of the major indices, and I think we can see all of the indices closing higher on the year.
Mike, we'll turn to you. Why have grain markets been so volatile this week?
So why have they been volatile? So we've had two different directions going on this week. We've had the beans and meal rallying versus the soybean oil. So we've had that trade going on. Then we've also had the grains losing to the soybeans. And as I was here last week talking about how the Chinese policy has been kind of changing to more grain orientated to go and put reserves on the marketplace. Yesterday, part of the big drop-off was the fact of two things. Number one, they came on out, and that it's more rumor than fact that the Chinese are going to go and maybe release some of their bean reserve stocks. There's no real factual other than rumor. But the other thing is that what's so funny is that this whole strength that we've been seeing in the marketplace has been nothing but more than maybe money flow than actual, shortageness. Because of the fact that the other second thing that came out yesterday was for the fact that the basis levels, that being for cash beans, meal, oil, soybean oil, wheat, corn, they've all been kind of sinking. So there really hasn't been any type of, cash correlation to the future strength other than the money flow. So I think that was probably one of the main points as far as what the volatility has been, is that the speculation as far as, we're going to get a commitment traders report coming out after the close today. We're going to go and see that the trade has gotten long, very much so. The beans, meal, and soybean oil, they've been shortening their strength in the corn, and they're adding back to the wheat. So it's all more money flow than going to say that the fundamentals have anything to do with what's going on with the cash markets. So the volatility.
What will the USDA report say, and what is the likely market reaction?
So there's the other important thing. So here we go again, talking about where the cash markets are and what the funds are doing, and then we're going to go and look at the, and it's going to be an important USDA report that comes on out because of the fact that they're going to come out with the first time with the 16-17 carryout numbers, both for the U.S. and in the world. And both those numbers, as far as what the trade is expecting, is for the fact that we're still going to be running around in the neighborhood of around 1 billion bushels of a wheat carryout. We're still going to be running around in the neighborhood of around 2 billion bushels of a corn carryout, old and new. We're still going to be running around with a 400 million bushel bean carryout, both old and new. There is some trade speculation that the acreage numbers will not be as high for the corn because of the corn-bean ratios we talked about last week, but added to the beans, and if that's going to be the case, we're still going to be running around with a carryout number that's going to be, how do you want to say it, not very bullish above $5 wheat, $4 corn, and $10 beans.
How is the May U.S. weather so far, and how has it affected planting?
Well, you look at the crop progress reports and the crop conditions. They came out with some Kansas City crop tour reports. Those numbers are very, very good. We had an early, how do you want to say it, scare in the sense that the trade made it fabricated more than we actually had anything factually going on wrong. That could be the case throughout the whole summer. So as we say, going forward in here, as we said last week, you still got this El Nino, La Nina switch going on. You got to watch it every day. I don't know. I guess I'm a little bit more, how do you want to say it, curious about how these Canadian fires are blowing up outside markets. So those outside markets go and kind of permeate into our markets to a degree. But once again, weather, obviously, front page.
Thank you both very much. Please remember that the opinions expressed here today are solely the opinions of our guests and are not necessarily the opinions of ADM Investor Services or Archer Daniels Midland Company. If you have any questions or comments or would like to know more about our services, please contact us at www.admis.com.